Hello everyone and welcome to my more important analysis videos with me, Rich Paramarket Analyst at Hantec Markets on Friday the 15th of June. Big news from yesterday, certainly the ECB meeting. We had Treasury, bond yields falling sharply as a result of the ECB, even though it decided to taper asset purchases and subsequently end them in December. The market was sort of focusing more on the fact that the rates guidance was pointing towards towards summer next year as the first possible real time that they could hike rates, and but also at the minimum, and looking fairly cautious on inflation. They've tied it to inflation pulling higher as well. So it's sort of the market has taken that as a pretty much of a dovish statement from the ECB, and subsequently we've seen the euro falling sharply lower. Really strong move to the downside on the euro, and that has had an impact on the dollar. But let me just show you the euros board. Euro yesterday was trading around the 18.20 level. It's actually now 15.80. It's actually jumped a touch this morning, but as the market has settled down, but 220 pips of downside move on the euro dollar yesterday. Now, we saw also that the dollar picked sharply high yesterday, as pretty much across the four its majors the dollar gained ground. But it's interesting that we've started to see the dollar falling back again today. Is that potentially as a result of Treasury yield starting to fall over? The 10-year Treasury yield has started to drop back. It could potentially be as a result of the fact that the US are expected to announce their trade tariffs against China today. They've had a revised list of these tariffs and they're expected to announce them today. Now the problem is that China are expected to retaliate to this list, and it doesn't look all that great for markets as a result, or the dollar tends to underperform as the trade spat has sort of come back to the surface, and it's generally speaking, I think it could well be the fact that the dollar will start to correct back again if this is something that really kicks off once again. The dollar hitting that resistance around 95.15 yesterday, or today, as the market has just come back again. That's interesting. So is this spike in the dollar going to last? Is the big question. Again, as I said, the euro has jumped back a touch today, and also sterling, after earlier weakness, has started to turn a little bit higher. Yen has started to strengthen again. So some interesting moves that we are seeing on these markets as a result today. We've got a little bit of data to tie up the week, nothing too significant. Final Eurozone inflation expected to be in line with where it was at the flash reading at 1.9% on the headline, 1.1% on the core. Then we've got the Michigan sentiment, industrial production for the states expected at 0.2, and capacity utilization slightly ticking higher at 78.1. Michigan sentiment expected to 98.5, which is slightly higher than the 98.0, which was the downwardly revised level of the final reading last month. Now, my chart today is sterling Aussie. Now, as I said, forex majors got hit yesterday, and there was a degree of volatility around sterling Aussie. Towards the end of the day, it started to fall back, but then bounced into the close and actually closed almost on a breakout level. But you can see here in the last couple of weeks, it has been building for this improvement. We've broken the downtrend, and now we're breaking out and completing this base pattern. Now 77.35 is the completed base pattern breakout. 77.32 was yesterday's close. So you want a closing breakout, and that would sort of give you an upside recovery target of around about 330 pips, which is a decent number actually if you consider the fact that 79 big figure is the next area of resistance, and there's not a great deal to hold the market back after before that. So that's 130, 140 pips from where we are at the moment, and the market is running higher with momentum indicators. MACD lines have just recently bull crossed, having been in this bear phase for at least 2 months. Stochastics rising strongly, RSI above 50 is looking pretty good. So corrections on a near-term basis are a chance to buy. We've had a little bit of a mini sort of move back today, 77.10, finding support. The key level of support would be, I suppose, that reaction low 75.30, but it certainly looks as though that the market is sort of running higher within this uptrend. So anything within this uptrend that we've got building on a 2-week basis, I think, is a nice little buying opportunity for sterling Aussie as the market looks to recover once again. So with that in mind, I wish you good luck in your trading, and I'll speak to you later.